Senator Casey.
Madam Chair, thank you very much. Chairman Bernanke, thank you for being here. We appreciate your testimony and your insights, but also your public service at this time. And I know it's not easy to be in the position you're in. I wanted to explore two general areas, if we can get to both. One is jobs, and the other is currency. First of all, with regard to both some of the data that's out there, as well as your testimony, there's a good bit to be positive about. I mean, I've said a number of times that the actions that were taken in the fall of 2008, when you came to us and presented the gravity of the financial situation, plus the recovery bill in 2009, and I think additional, more recent job creation bills have had a positive impact, and even more so the next couple of months. But we still face a situation, for example, in our state where, even though if you look at the rate, we're at about 8.9% unemployment, which in a relative sense is lower than a lot of big states, but it still means 577,000 people out of work. If it's not a record, it's very close to a record. And then I look at it in terms of individual regions. We've had this unfortunate confluence of misery in places as large as Philadelphia, where the unemployment rate's been at 10 for a long time, and it just bumped up more recently to over 11. But next to Philadelphia, you have numbers higher than that in very small and often rural counties, where the loss of one employer means an unemployment rate of 12 or 13 or 14%. Having said all that, in the midst of all that misery for a lot of people, we keep hearing that small businesses have trouble accessing credit. We hear that over and over again. The dichotomy between that difficulty that folks are having, especially small business owners, and then you see the headline in the New York Times saying, and I'll read it, J.P. Morgan is upbeat on economy as it posts profit. For a lot of people out there, there are two words in that headline that are at variance with where they are. One is upbeat. A lot of people are not upbeat for the reasons I cited, those numbers. And the other word is profit. A lot of people are not seeing profit in their own lives or the bottom lines of their small businesses. So as a long predicate, I know that you've highlighted, in addition to your concerns about fiscal matters like the deficit, you said, and I quote, the decline in large part, meaning the decline in credit to small business, reflects sluggish loan demand and the fact that many potential borrowers no longer qualify for credit, both results of the weak economy. Instead, and that's kind of the diagnosis of the problem. What do you think are steps we could take in the short run, meaning the next 6 months to the next year, that would have a positive impact on the jobs climate as it relates in very particular way on small business?
Well, again, the small business problem is a very difficult one because we want small business to have credit, but we want to make good loans. We don't want to go back to the weak lending standards of before the crisis. And so, as I've discussed earlier today as well, it's a very high priority of the Federal Reserve to work with our banks and our examiners to make sure that there's an appropriate balance. That is, loans have to be appropriately underwritten. They have to be sufficiently likely to be repaid, prudent. We don't want banks to be losing money on bad loans. But on the other hand, we certainly don't want a modern equivalent of redlining. We don't want to say that the whole category of small businesses is not to receive credit, or all retailers are not to receive credit, or nobody in the state of Florida is to receive credit because of, just a general category. And I think part of this is a cooperation between the banks and the examiners working together, understanding each other to make sure that every loan is evaluated on its own 2 feet, so to speak, so that you could very well have a situation where the value of a property has gone down, but the company has a stable business and has been able to repay for many years. In which case, we have provided guidance to our examiners and training and asking for feedback, in which case that loan should be made, or at least it should be given a very careful assessment. This is something, it goes back to a point that Senator Klobuchar raised, which is the Fed's involvement with the banking system. We are, of course, bank examiners, and so we're and safety and soundness examiners, so we're obviously very concerned about making sure the banks are safe and sound and making good loans, not taking undue risks, et cetera. But on the other hand, as the Central Bank of the United States, we're also very concerned about the overall health of our financial system and our economy. And therefore, perhaps more than others, we are really focused on getting that balance right. We really want to make sure that good loans do get made, that they're very much in everyone's interest. So I've talked about some of our programs and our information gathering, and we've had meetings around the country and conferences, and we're collecting extra data that we didn't used to collect before about small business lending. We've put extra questions into the NFIB survey to try and get more insight. And as I said earlier, I invite direct feedback from members of Congress and their constituents who have suggestions and ideas about how we can better, meet this need. From Congress's point of view, it's again a difficult problem, but we discussed earlier just a bit some proposals to use TARP money, $30 billion in TARP money, to provide additional capital or reserves to incent small banks to make more small business loans. And there are a lot of issues how to do that, but that's one direction that could be constructive.
Thanks very much.